I'm joined today by Jason White, Lead Portfolio Manager of Artisan's Global Discovery Strategy. Jason is among the incredible investors sharing insights at the Equities Investment Forum today. Welcome, Jason. It's great to have you with us.
Thank you so much. It's a pleasure to be here.
Jason, what makes the current environment attractive for investing in SMID-cap stocks and, more specifically, for Artisan's Global Discovery Strategy?
Yeah, I think there's 3 or 4 factors I'd point to. There's valuation. Small and mid-cap equities generally are cheaper than large caps. Large caps have outperformed small caps for a decade now, but historically, small and mid caps have outperformed large cap more of the time than not. So valuation is one. I think fundamentals would be another. If you look at consensus earnings growth for small and mid-cap companies, the growth rate is forecast to be faster than large caps. And that's the first time that dynamic is present in a number of years. So that's interesting. Interest rates. Generally, this segment of the market does better when interest rates are falling. We'll see what happens to the long end of the curve, but we know with some fair level of certainty that the short end of the curve is coming down. And then I think the last one would be a historical analog. If you think about the market today, it's driven by AI, right? This AI theme, and that's expressed through some very big companies. If you go back 25 years ago, during the internet mania, there was a similar dynamic where that same dynamic was at play in the market for a different technology transition. So I'm not trying to make the case that it's the exact historical analogy, but I think it's similar. And what you observed 25 years ago, when that internet wave crested and the technology diffused itself into other areas of the economy, it resulted in small and mid-cap equities outperforming for a decade. I think there's a number of reasons that we can point to. It's always hard to say exactly when, but the conditions are right. In terms of why global discovery, we're focused on finding tomorrow's large caps. So a big part of our strategy is to buy businesses that have competitive advantage, that have very strong profit growth for reasons that we can measure, model, and understand. And we're very excited about the setup as we look out over the next couple of years.
And how do you evaluate liquidity challenges in SMID-cap stocks globally? And are there specific regions where they're more pronounced?
Yeah, liquidity is not a huge issue for us. There are, of course, regions where it's less pronounced, but we need about $3 million per day of average trading volume. And if you look at the universe of stocks to invest in with that profile in small and mid cap, it's ample. On occasion, we find ideas where the liquidity is challenging, but it's definitely the exception to the rule.
And what role do IPOs typically play in your investment process, and how frequently do they present opportunities for SMID-cap investors?
Yeah, IPOs are immaterial to our returns. I would say they're a channel for idea generation, but not a particularly rich one. On occasion, you find companies that match our profile. Today, we have one company in the portfolio that IPO'd last year. It's like anything else. You find ideas where you can, and IPOs are one of many sources where we find them.
And how do you respond to the view that many of the most compelling small cap companies are now in private equity hands?
Yeah, I think from a couple different perspectives. One, if you look at the typical price paid by private equity in their acquisitions, it tends to be smaller than the small cap segment. Two, I would say there's over 7,000 companies in the SMID index. I mean, there are ample opportunities to invest there, and there's also a number of names that aren't in the index that we find attractive as well. So on the margin, perhaps it's an impact, but it's certainly not one that we notice.
Mm. And how significant are takeovers or strategic acquisitions in driving returns? And do you ever invest with the expectation of a transaction?
It's great when it happens, but it's not something we try to underwrite. In our view, trying to build an investment thesis around a takeout is speculation. But when you invest in well-positioned, small and mid-cap equities that have a real growth story, it's logical to think that larger companies will want to buy them. So we take it when we get it, but it's not something we go looking for.
Thank you so much, Jason. We're going to need to leave it there and get back to the forum. I really appreciate you sharing your expertise with us today and for being a part of Global Investment Institute's Equities Investment Forum.
It's been a pleasure. Thank you.